Hi, this is Anthony Parent of IRS Medic, and thanks for joining me today. We're going to go over our 2023 IRS Medic Form 5471 guide. The last guide I did was in 2016, and it was amazingly popular, and I helped a lot of people figure out how to get going on it, and also helped a lot of people figure out that maybe this is a little too much for any one person to do. Rather, you need a team to help you support it because it is really the most insane form. So the purpose of this episode is to explain it what it is, but here is the entire course. You're watching the first episode. There'll be other later episodes being uploaded, so you'll want to be sure you're subscribed so you get alerted when that happens. Today we're going to spend some time explaining what Form 547 is, so you can kind of understand it when you get to that point of preparation where you're just banging your head against the wall wondering why something would be so obtuse. There's a reason why. It will make sense. And so the other trainings we're going to have is on 5471 category filers, the instructions and the modules on the various schedules. Going to be talking about international taxing concepts like check the box election, what all that stuff means. We're also going to cover GILTI, right? GILTI is an important part of this. We're going to get into some tax planning. There's actually some tax planning opportunities available, believe it or not. And then here's the thing, I want to really create the best guide possible. So please be sure to subscribe, and I want you to ask your questions, what you think we should cover in these and things we're missing and anything you want to add to correct us. Absolutely. We are trying to create the best guide possible. So let's answer it in IRS worlds, right? What is IRS Form 5471 according to the IRS? Well, certain U.S. citizens and residents who are officers, directors, or shareholders in certain foreign corporations file Form 5471 in schedules to satisfy the reporting requirements of Section 6038, Section 6046 of the related regulations. So Section 6038 and Sections 48 are the current versions of what was originally passed in 1960. Okay, 1960 is the date. We kind of have to put this in context. Then we'll kind of figure out why it's the way that it is. Once we understand what was going on at the time, it starts to make sense. The fact is, Form 5471 can be unbearably complicated for small and medium-sized businesses because the form was really originally designed for large multinational corporations. So this is the question that I need to get to. What are the 1950s and 60s known for? This is the context that I think I missed in the first training, because this really explains it. Now, a lot of things were going on in the 50s and 60s, but this is a tax channel, so what kind of things was going on then? And I'll get to the answer. It is 90% marginal tax rates. Yeah, a marginal tax rate of 90%. I mean, why not just go for 100 there, folks? You're taking it nearly all. I mean, insane, a 90% tax rate. You know, and this is what you need to understand. A government that would impose a 90% marginal tax rate in peacetime must truly hate the people it rules over. What else is this explanation? It's so awful. Now, here's the thing. It's 1950, 1960. What's your easy solution for this 90% marginal tax rate? The easiest solution is just go offshore. Put your money overseas for something called tax deferral. What is tax deferral? Well, it's basis of most international tax planning, and it's basically, think of it like this. A traditional 401k, contribute money tax-free, pay taxes upon disbursement. That means the growth is also happening tax-free. But the 401k has severe limitations. It's okay if you're a long employee who's going to put aside a little bit each year to hopefully have a huge retirement at some point. But for most people in business, it doesn't work out that way. You're in business, it doesn't work out. You might have one good year and 20 bad years, but still consider yourself a success because all that money came in 1 year. So going offshore was simply, it was a great, simple, one-size solution for brutal taxation. Just defer as much as you want easily. Get out of that problem quickly. So if this was so easy to do, so how do you think a country that would tax you at 90% would feel if you could easily escape their confiscation? Would they just simply allow you to go, or do you think they might burn the house down a little bit here? Do you think that's something that could happen? So what would they do? If they really wanted to tax you at 90%, they're angry and they're mad and they're out of control. So what they would do is create some very difficult reporting requirements for that company you're sending your money off to escape that. The form is 5471. And now there was another thing that came later, and a couple of years later, that's subpart F, and I'm going to be that's not part of the form, but it does come into play, and I'll be discussing that in a later training. But 5471 reporting of 1960, it was onerous training. It was onerous. It was difficult from the outset, and it was designed, I think, for large multinational corporations like General Motors and Coca-Cola. There was no 5471 EZ. That wasn't a thing they did. That was no. We're going to make this as difficult for everyone. And I think you need to understand the intention was to punish people who dare go offshore, which may make you wonder, well, why is the IRS forcing you to report things that happen in corporations in other countries? Well, the answer it's a little complicated, but it comes from the words citizenship-based taxation, a worldwide taxing jurisdiction. You know, the law, Title 26 of the U.S. Code is where you find the entire tax code. You know, it never says the word citizenship-based taxation or world. It never says it. It doesn't say it. Rather, where we find that is in the regulations. That is, the regulations create citizenship-based taxation. So there's not a law that anyone voted for, but rather this is all created by a bureaucracy. Because the thing is no constituency actually exists for it, no legitimate. It's only the government bureaucrats who asked for this, but no representative did. No president signed this into law, but rather the people who work for the government said, you know what, the government needs this. So if you understand their rage about people escaping their death grip, then you'll understand Form 5471 better. Again, I'll give you that subpart F guide. But 5471 was a precursor. It's what pins Americans down so later things like subpart F and guilty can wreak havoc. What you need to do is think about Form 5471 as the 90% marginal rate tax preventer, right? That's why it exists. Now, while tax rates have dropped since then, Form 5471 has only become worse for taxpayers and preparers alike. So let's talk about some of the negatives of this awful form. It's truly awful. There's a $10,000 penalty for not filing. Doesn't matter if you owe zero in taxes. That doesn't matter. It's $10,000 penalty for not going through the rigmarole of giving the government what it claims it all needs. Now, there's also a $10,000 penalty if you did not substantially comply. However, it's different if you are working for a large multinational corporation. They actually kind of take it easy on you. From what I'm told, our clients are not the large corporations, but rather family-owned corporations or maybe a closely held corporation. So usually when we prepare ours, we have to prepare them to the highest standard. But if you are preparing them for a large multinational corporation, from what I'm told by people who deal with it, the IRS is much more lenient on that, strangely. But it's not so strange when you understand how it works, though, right? Here's the other problem. If the IRS feels one is due, and I'm going to say that word feels is what I mean, then the IRS can assess you at any time. I did have this case in 2017. A client came in to me, and he says, yeah, the IRS assessed me something called 5471 penalties. I said, well, why is that? He says, well, they said my name popped up on a bank account in Switzerland. I'm like, okay. He goes, oh, no, it was my dad's account. And he said he put me on a signature on it, but I've never gone there and never had access to the money. I'm like, okay, well, then that might be an FBAR that's due, but the FBAR has a 6-year statute of limitation on assessment. So this is a 5471. Why are they going back to the year 2000? Well, then the IRS made the bold claim that, well, because this was a corporate bank account and that my client was a signatory on the bank account, even though he didn't know this, therefore my client was a shareholder. They're completely wrong on the law every which way, but there it was. They assessed the penalty, and unfortunately, he did not know how to appeal, so the penalty was complete. Now, we worked out the case in a different way, but and it really could have been unhappy if we didn't get that when we did. So it's something to be aware of. That if the IRS feels one is due, you actually might not be due one. or you're actually not doing, but they're going to say that because now you have to refute their claim because they're saying one is due. Well, how do you prove a negative? And that's the issue. Really, it's very difficult to do that. It also opens up your entire return to statute of limitation. Now, the hypothetical I gave was actually a real case. So 2017, he's coming in with a year 2000 5471 penalty. The IRS can do that. And not only that, if the IRS wanted to, they could have opened up his entire return. He was self-employed at the time to assess him anything else in taxes they felt like was due. They actually didn't do that. So they just hit him with a $10,000 penalty for all the years involved. Now, the IRS could have gone worse. They could have hit him with a $50,000 continuation penalty for asking for the 5471 and him never doing it. So he actually lucked out that he didn't get $50,000 per year as opposed to the $10,000, and he actually got 5471 penalties. So he had $170,000 worth of 5471 penalties. That, again, we were able to solve in a different way. I would have liked to got to that appeal a little bit earlier. And again, it could have been a lot worse. It could have been 17 times 50,000 there. That is what, $850,000 penalty that you have to prove the negative on. And that's really sort of the thing to watch out for. Now, this is the thing I want to talk to you. When I started as an attorney, prior to my dad and I starting IRS Medic in 2006, I was doing a bit of everything. And as you can imagine, it's kind of miserable because you kind of make mistakes. And I had a mentor. He was an older attorney, still practicing law. I call him Uncle Joe. And Uncle Joe would pull me out of the fire so many times, helping me out with procedure, figuring things out. And he would say to me this, and it just sort of helped me, get a hold of things. He says, Anthony, it's called the practice of law. It's not the perfection. And tax is all nothing but law and regulations and how the law relates to it. So remember, this is called the practice of tax. So when we're trying to perform we're prepare a 5471, we're not necessarily knowing what the perfect answer is going to be. We're going to know what a passable answer is, and that's good enough. The thing you need to understand is the IRS does not have the staff to review Form 5471 for substantial compliance. The IRS is forced to assess penalties where it's easy, where no 5471 was filed at all. Think of the case I had. He didn't file one at all because he didn't think he needed to, and nor did he actually need to. But there wasn't an agent who could have said, oh, well, you know what? I could see here on your Schedule I-1 that you put the number, well, you already lost on a Schedule I-1, right? There's really not that there. Now, there are some truly brilliant IRS employees. There's not that many of them, and they're all looking to retire if they haven't so far. So it's, your mistake you make needs to be so obvious. This is the way to think about it, because this is really it. It has to be so obvious a new IRS employee with some training but little experience and international experience can see the error, or it has to be something the IRS can automatically assess through some sort of program. Okay, they were doing that with the Form 3520, 3528 penalties. They tried that app, messed it up terribly, assessed penalties to people who definitely didn't know them, and we did a lot of work on doing that. So that is what we're going to do. So if it's something that requires someone to actually understand the numbers in the form, they will probably never get reviewed by human eyes. Now, this is the other thing too, and this is sort of where the IRS keeps things intentionally vague. Okay, that's what, let me say. The IRS wants the law to be intentionally vague. That's the way they could use it as a hammer to hammer people they want, and then they just ignore people that they don't want. So this is what I mean. We did have a case where a client had a Form 5471, but the IRS claimed, oh, it's not substantially complete. I was like, well, how? Tell me how. Well, a lot of running around like, well, what's your law that you're going to say this is substantially incomplete? Well, the IRS in its lead sheet that it sends to appeal put all its law that it says, oh, this supports our contention that this 5471 is substantially incomplete. And when you know it, every single case they cite has nothing to do with substantially incomplete. It has to do with whether or not they filed one or not. So they claim the law that doesn't support that stands for their proposition, which it doesn't, supports them. So that's the thing you have to be aware of. The IRS does not necessarily like to tell the truth. I don't know if they know they're not telling the truth, but it's not the truth. So their legal statements they make are often fantastical, and they're meant to knock over the easily intimidated tax professional. Well, that's not you, but that's not you. Um, this is the thing: the IRS likes it vague because the IRS doesn't like to lose. Because what happens? What happens when we go and contest that case to say, hey, look, that is substantially complete? Well, the tax court may rule in our favor. The IRS doesn't want that, right? Because now everybody who's didn't file one substantially complete is going to use that as its base to say, hey, look, no, it's good enough. So the IRS doesn't like to lose. So when you push back and say, oh, actually, no, it's fine, who's the person at the IRS who's going to say, oh, it's actually not good? Why? And what's their law? And they don't have it yet. So again, the IRS prefers slam dunk cases as that's what they have the ability to complete. And it's not saying that anyone at the IRS is not dangerous or doesn't have the ability to figure this out, but they're just so overwhelmed with all the things they have to do and the amount of training that would go in to teach everyone about a 5471. I'm sure it would be a year. It would be a year just to learn about this one firm, to learn everything about it. Well, who has time for that? We have to do work. So that's the truth for tax preparers, and that's why I'm making this guide so that you can quickly get into it. It's also the truth for the IRS. Maybe they'll watch it and maybe they'll learn something too. So the thing is, remember, is your 5471 going to be perfect? I don't know. I mean, I'm sure, we prepare ones like, oh yeah, I guess I could have done that differently. The question we want to answer is that will withstand scrutiny. And that's what I hope to teach you throughout this series. Now, I want to talk a little bit about who we help before we go on to the next ones. But oftentimes, and this is what I found, the last guide I put up there was really for tax preparers, to help out the tax preparers that send us clients and, to really educate a lot of people on what's involved here. Remarkably, we ended up with a lot of clients with our last guide. And so my guess is we'll end up with a lot more with this guide because a lot has changed and it's only gotten more complicated. And you as a taxpayer probably watch this video to say, hey, look, someone said this form is really complicated. I could probably figure it out, and maybe you can. And maybe yours is simple enough where you can figure it out. But oftentimes as you're digging in, or even maybe it is your own firm's CPA, your own in-house counsel, is trying to figure this out, and they're just scratching their head and they're giving up. Well, we can help you out. We can make sure your Form 54-1 is completed, even if that is all you need from us. If you have the rest of your tax return done, no issue. We can do that. So just send an email to info@irsmedic.com and we can get on that. The other thing now, tax preparers. We are looking for tax preparers, the best. And so we hope for you to apply for a job from us. And actually, it's our new policy because I did really well. The last hires have come off of this of a video I posted on YouTube. And so I'm really happy with that. So I'm not posting ads for anywhere but here. So in our grand scheme, we're only looking for 12 preparers total, CPAs, enrolled agents, those looking to become CPAs total. We're also looking for people to handle resolution cases as well. If you want to work for a remote firm, that's us. I'm based in Connecticut, but we have our team members all around the world, and we have no problem, and it's really great for us and our clients. We offer competitive pay, and I really think this is one of the things we have. We have a really great IT. We're using TaxDome, and we're with UltraTax. So TaxDome is sort of the program that interacts with our clients to make sure that they're not getting overwhelmed with stupid organizers that go on forever and just gets them mad and angry. And then we use UltraTax because we have found it is just the quickest. For entering stuff in, it's kind of has an interface of a Windows 95. Dialog boxes, but I think that's why I love it, because it just does it so quick and it switches back and forth between input and the form, so you don't get lost. Well, where does this show up on a tax return? Just go boom, it's right there. You're not messing around, so you could really kind of hone your product a lot quicker. And not only that, you will have access to some of the best legal minds and a real community that you can be a part of. My dad and I started this firm back in 2004, and then we did tax solely in 2006. So between us, you have about 40 years of experience in tax and all the other laws of which taxes apply to. And we have handled a lot of cases. We've had brilliant people work for us and still continue to work for us. So really, we always can help out every situation. So if there's something that you're working on, you're hung up on, we can probably get you back to work just sort of talking it out. The other thing too is if you're looking for that CPA certification, it's something we could probably help you with. Also, and this is a big one, I haven't mentioned this before, but if you want to become an attorney by clerking for me, well, guess what? I'm a Vermont licensed attorney. Vermont is a funny state. There's things that you wouldn't surprise, like there's no concealed carry permit required in Vermont. You just carry a gun. That's fine. And the other thing they have is they have a clerkship program. So for people who graduated for your college degree, you can clerk for me for 4 years. Now it's an actual real. The Vermont Bar Association has a real curriculum, so you just can't like pretend you're doing it. Actually, there's some work you would have to do, but you have plenty of time during the off season to do that. And then once you do that, at 4 years, you could sit for the Vermont bar and take it. Now, once you're a Vermont attorney, you're an attorney for all federal income tax purposes. You're fine. You're an attorney. You can call yourself a tax attorney. You'll likely not be able to get a reciprocity with any states because most of the states I understand do require a JD or LLM degree, so that you wouldn't have, but you would be 100% an attorney. I would love to have someone interested in that. So either way, send your resume, what you're looking to do, questions you have to employment@irsmedic.com. And again, I'm just going to say, be sure to subscribe because the next one is going to be coming up. And let me just get back up to what the next one we're going to be covering here. We're going to be going over the category of filers. Okay. And really, that is going to be a big chunk of making understanding it correctly, because once you have the categories correct, then you know which schedules are there. And we're going to go over the schedules, but the schedules, I kind of think it's hard to get too far off. That's usually when you look at it, when you're done reviewing it, you're looking at a number, and what's going through your head is like, does that number make sense based on what you have? And that's your starting point. And I think that if you're there, that number looks pretty good, you're probably pretty good, and certainly not something, again, what are we trying to do? Do we know it's perfect? Maybe it will be. Hey, that'd be great. But we're trying to get something that will withstand IRS scrutiny. That means something that's not enough. That means filing it with the proper schedules. And getting the schedules close enough, you've essentially foreclosed an easy time assessing penalties. They still might, and if they got a reason to get after you, but really, they're going to move on to other cases. They're going to move on to the easier ones where one was partially filed, or one was filed 1 year but not the other year, or that a Form 5471 sort of naturally infers other forms may be required. That's what they're looking for, because again, they want the slam dunks, and that's what we're going to avoid here. We're going to file 5471s that are going to withstand scrutiny, and that's what we're going to get you through. The other thing too is I want to create the best guide. Again, I don't know if I said this in this one, but again, please ask whatever questions you have, what you think we should be answering things of. So that's why I'm giving you this entire curriculum right now, so that you could say, hey, I think you're missing this. This is something, or make sure you cover that in that topic. So please leave your comments. I look forward to it, and look forward to hearing from some of you.